Hey everyone, it is Evan here from the Trade Risk on Friday, February 7th, here with a weekend market recap video. We're going to cover all of the major markets, the current market environment, and finish off looking at some sector analysis. So it was a very strong bounce back week for the markets. All of the major indices up 2 to 3, even as high as 4.5% here in the NASDAQ 100 over the past 5 trading sessions. Now, of course, when we look at Friday's performance, you can see we did sell off into the weekend here. The Russell 2000 was the weakest of the group, but we basically had about a 1% sell-off across the board on Friday, which did put a damper on this week's rally. But still, make no mistake, the bulls certainly stepped up this week, given the backdrop that we started the week off with. So we'll look more in that in just a moment here when we jump into the charts. You can see we're above all of the key simple moving averages in the major indices. If we scroll down and take a look at what performed this week, it was really dominated by semiconductors and tech. At the top of the list, semiconductors, IBB getting a sharp bounce back, up 7%, nearly 7% over the past 5 days, followed by tech and materials. On the downside, utilities taking a breather, a well-deserved breather, because they've been at the top of the list, really on fire to the upside, followed by energy and staples, all in the bottom 3 over the past week of trading. In terms of major markets, China getting the strongest snapback here, up almost 4%. Followed by the S&P and emerging markets, and volatility, given the magnitude of the move here in equity markets to the upside, makes sense that we're seeing a little bit of unwind here in the VIX, down 17%, followed by oil and silver. So let's jump into the charts here. Let's take a look at the S&P 500. This is where we're going to start. Weekly view here, time series. Each bar represents 1 week worth of trading, and we are looking at the cash settled S&P market. So when we look here at this week's session, we can see that we put in a very strong snapback here, reclaiming the slope, the bottom end of this weekly trend, this weekly channel that we started in back in October of 2019. We broke down below it last week with a week close down around 32.25, and we came roaring back here, took out last week's highs, in fact closed above, almost made new all-time closing highs. Let's see if we did. 33.29. We in fact did make new all-time weekly closing highs here. Sometimes the numbers, because I'm recording right at the close, need to settle out a little bit, but it looks like we made a new weekly all-time closing highs. I don't think, well, certainly not today, but on yesterday we did break to new all-time highs in the S&P 500 on a daily basis. So basically what this looks like and what this means here is that the bulls stepped up and did save this market from really waterfalling lower. If you recall our conversation from last Friday, the S&P suffered its first back-to-back down weeks in 4 months or so since September of 2019. It was the largest sort of pullback we've seen in this rally. So we had all of the makings for the final big, or the long-awaited pullback to really kind of set in here and see some fear come into the market. And instead of the cascading effect, instead of opening up that pullback to a deeper retracement, buyers stepped in and again just kind of scorched back up to these prior highs. Now, if we go to the daily chart, of course, now you can see this is an interesting spot where the market, kind of pauses and fails here on Friday. It makes sense. It's certainly logical because it's getting back up to these prior all-time highs from just a couple of weeks ago. But if we did fail here, then of course that sets us up in kind of a similar situation as last week, where we're waiting to see the market prove itself. We're waiting to see if buyers are still committed to this market. Certainly trends are higher, but once again, very much like we've talked about here, is that the market doesn't always have to just go up and go down, or go down. It can go sideways, and if we do kind of continue to hesitate around here, I would suspect that we have more chances of sort of falling back into this range, and perhaps the new, kind of territory again, as we've talked about, is this lower 3200s to mid 3300s for the S&P 500. Call it a 4% range, where this market may want to dance around and consolidate into the end of the month of February. Now, if we switch over to our other view, again, we have just a busier, more granular look at some of the prior levels to pay attention to. You can see we ran into these prior all-time highs. We pulled off a little bit, and heading into next week, heading into Monday, we'll be watching to see the highs here and the highs made from Thursday around 33.45. If we can break above those, then the market, of course, has no more overhead supply, and this trend can continue in its sort of uninterrupted phase again if we start getting closes above there. If we do see a pullback, if we do see more weakness to start off the week, we have a couple of gaps that this market may want to fill. Got a small one here, got one back from Tuesday of this week as well. So there is some more work to do in this range if we do fail and immediately fail and start to pull back. So that's really, the landscape, all things considered, for the S&P 500. It continues to find support. This pullback ended up being about 3.5% off of highs. So far, that's good. And the good news about kind of what happened this week is we do have some very important lines in the sand now to pay attention to. So of course we have all of these smaller horizontal levels, shorter term levels to pay attention to, but this 32.15 now, this I think is really going to be an important one to pay attention to, because again, it's where we found support early in the year, late in 2019. It's where we just found buyers show up again just this week. And if we start to roll over from there, if we do get a meaningful break of 32.15 in the future, then that's something where we would want to be paying attention to manage risk and look for potential trend changes. So that's the S&P 500. If we go to the Russell 2000 here, the Russell 2000 did sell off over 1% here on Friday. It's still the messiest of all of the major indices, but once again, it did still step up this week. It put in a 2.7% positive week here. So again, the quick snapback is short-term constructive. Now we just need to see the Russell 2000, ideally, in my book, stay above this 163 zone, 163.50. We basically had, two sessions closing below this area, and there's some, of course, prior supply in here and prior support from earlier in the year. So the Russell staying above this zone here, that would make it at least as bullish as possible in my book in the short term. There is a big gap here that perhaps, especially given Friday's action, we may need to retest and fill here to see if there's still conviction. That closes out around 163. So the Russell, good snapback, but still the weakest of the bunch. And if we look at the NASDAQ 100, this was already breaking out on Tuesday of this week to new all-time highs. So again, this had a had this trend break here last week, of course, on Monday the 27th, and it did move sideways here underneath this channel. Monday of this week, we started with an inside session. We kind of didn't roll totally over from the way we closed on Friday, and then Tuesday led to the nice gap up, which closed us at new highs. And here we are again, but kind of back in this upward channel, this strong trend, and the strong slope and ascent here for the NASDAQ, which has been our leadership group for the past several months now. And it looks like it's continuing to resume its role, especially with the performance it put in this week of almost 5% to the upside. So that's the rundown on the market as a whole. I think we got some good lines in the sand. Basically, this week's lows, those are going to be the critical points, kind of intermediate points even, I would say, to pay attention to going forward. But given the backdrop we had coming into the week, I'd say it was a good win for the bulls, stabilizing this market, putting in higher lows, and resuming the trend to the upside. So let's look at some other markets now. Go to TLT, which on the week did suffer a pullback here, 1% down. This was down much more earlier in the week. It was down about 2%, a little over 2.5% down here. But the snapback that we saw on Friday, again with TLT, does make this look like a, at least a potential higher low in the making. It's a little too early to certainly confirm that, but nice kind of pullback here in an uptrend for TLT. I'd be paying attention back up to these prior highs around 146 next week. If we can get back up there, let's see how the market reacts there. But for now, TLT holding up and continuing to remain technically in pretty good shape. Gold, very similar here. It did, remember, pull off on Friday pull off on Monday when we did our Tuesday recap. We talked about some of the damage here on how it pulled off immediately and started to come back into this range. Luckily, there was no follow through. It did not break through this upper level support. It did find kind of coasted higher here into the end of the week. It's moving sideways. It's been moving sideways all year effectively, just consolidating the strong run up it had in the month of December. And again, technically, this thing is still just holding up near multi-year highs. So, if this can tighten up a little bit further and this turns into a continuation pattern, this suddenly starts to look real good again. If it does end up rolling over below 145, then, we certainly have more caution to think about here for gold. But for now, we'll let it consolidate. We'll see if this makes up its mind in the coming weeks to resolve this range. Silver is pretty much the same thing. Again, it's just mostly consolidating, more of a downward tilt here. And again, it's not trading quite at multi-year highs like gold is. It would have to get all the way back up to 1830 to be at the multi-year highs it made in 2019. It's still technically at least holding up from this move it had in December. A little bit weaker than gold, but if it can start moving over again 17, start resolving this consolidation higher, then it can look pretty good pretty quickly. Oil and energy next continues to be in a pretty tough spot here, down 2.5%. Again, sort of like what we talked about last week. It's still pretty stretched to the downside here. It's oversold. It's down 6 weeks in a row, and it's back to some pretty important prior support where buyers had showed up and accumulated some USO. So let's keep that in mind in the context here of where bounces are likely to occur. This is a spot where it's likely to occur. Haven't really seen it just yet. So again, doesn't mean it has to occur, but we want to at least pay attention to the prior levels here. And the market certainly cares about it because, it's stopped kind of in its downtrend here at this level, showing some significance. And we'll see if it can start to resolve this 4 or 5 day range, either to the upside and see some type of bounce and reaction, or if this ends up turning into a continuation pattern. If it is a continuation pattern, then it's certainly going to be a potentially scary looking one if oil starts to break down to, closer to multi-year lows. So oil still in a tough spot right now, and natural gas pretty much same kind of situation here. It's in a tough spot. It is stretched to the downside. There has been some positive momentum divergence, but this is trading at multi-year lows here. All longer term trends are still pointing downward. So natural gas needs a lot of work, a lot of help, and it's moving sideways. It's getting tight here. So again, I think it's interesting if you're looking for some expansion in natural gas. It has tightened up over the past 5 or 6 trading sessions. So that's it for major markets. Let's take a look at sectors now. We'll go to the top performing, bottom performing sectors. So biotech. So this is kind of the equal weighted XBI, smaller cap biotech, or equal weight, I suppose. And this one here did have a 7% rally here this week, all the way from the lows back up into some of the highs it saw just earlier this year. It still, hasn't broken back out. It didn't close at new highs here, so you could argue it's still kind of just moving sideways. Perhaps, even got more of a tilted slope here on its prior peaks. So there's still some work to be done for this particular market, but it was a very strong showing here. And I know, at least from the strategy that we run, there has been a good amount of accumulation going on in some of this in this space. Been picking up some more biotechs, individual components, not the ETF outright, and over the course of the past 2 weeks or so. So we'll see if this can actually get a breakout and start leading to the upside here. But for now, still kind of in a holding pattern within the longer term trend, which is, at least starting from October, is still to the upside. Number 2 is just the market cap weighted biotech, so IBB. Very similar here, just had a nice ferocious kind of snapback this week. Didn't quite break out to new highs, got very close, basically retested them on Wednesday, pulled off of it. So still waiting to see if this can hold this action, hold this move, and then get some follow through. Basically what we're waiting for in both of those indices. Now, technology was number 3 here, and technology back in its uptrend. It really didn't break down from it. I mean, it did close down from it on the 31st of January, but it didn't expand too far away to the downside. It didn't make a big convincing breakdown. And, of course, with the quick recovery we saw on Monday, we came back above this channel, and now here we are just kind of riding that upper rail again for XLK. So technology just continues to work here, and that's been, again, the leadership group. Semiconductors, we'll look at the 4th top performing just because the 2 biotechs. Semiconductors here, mostly sideways. Did have a nice snapback this week, though, 4% to the upside. Didn't break out to new highs, though, so at best we're still kind of potentially looking, sideways here. It was a great save on Monday because when I look at semiconductors here, there's not a whole lot of prior support until down around 130 or so. So if we do start rolling over hard, there's a good 5, 6, 7% additional pullback in probably pretty quick order down into the low 130s. If it does start to break. Now, on the downside, we had utilities. Really, it's laughable to say it's on the downside, but it certainly underperformed on the week anyway. It was slightly down, but of course, it just had a pretty monstrous move here. It was up 9% in about 15 trading sessions. So for utilities, that is a very big move, and some consolidation, some sideways, going to sleep here and just kind of working this off makes a lot of sense. So utilities going sideways there. Energy up on the week, but still in the bottom bucket. This continues to struggle. It came and pierced briefly below the 2018 lows, and then it bounced back above them. So this is going to be an important spot to hold. If we start breaking down from this general area here, then we're trading at multi-year lows for energy, while most of the market is trading at multi-year highs or all-time highs. So energy just still kind of in a tough spot there. And last but not least was staples. Staples still finishing up 1.5%. In fact, you can see still making a new all-time closing high here on Friday. But compared to some of the higher beta sectors of the market that worked this week, it was in the underperforming or the bottom of the relative strength list from a sector basis. So that's it. That's what we have for this week's. Lots of action, but bulls stepping up. Earnings season still going on, but we're through the thick of it. There's still some more earnings to be had, so do check those dates. But we've got through a lot of it, and just a lot of headlines, catalyst, Fed, and everything else that's been going on. So that's it for me. Hopefully you guys had a good week trading. Thanks so much, as always, for tuning in and watching. You can subscribe on our YouTube channel or follow us at The Trade Risk. Have a great weekend, and we'll see you back here next week.